In the world of finance, there's a giant that often remains undercover. However, its influence is felt across the global economy. With over $10 trillion in assets, BlackRock has become the largest asset management firm. But just how much power does it have? And what does that mean for our financial future? Larry Fink is the chairman and chief executive officer of BlackRock. He was born on November 2, 1952, in Van Nuys, California. Fink grew up in a Jewish family where his mother was an English professor and his father owned a shoe store. As a UCLA graduate, he received a BA in political science in 1974, followed by an MBA in 1976. Fink began his career in finance at First Boston. He played a key role in developing the mortgage-backed securities market in the United States. Despite his early success, he experienced a significant setback in 1986 when a misjudgment on interest rates led to a $100 million loss, which caused his departure from the firm. In 1988, Larry Fink co-founded BlackRock under the corporate umbrella of the Blackstone Group. He started with several partners, including Robert S. Capito, Susan Wagner, Barbara Novick, Ben Golub, Hugh Frater, Ralph Schlossstein, and Keith Anderson. The group came together with a vision to provide institutional clients with asset management services from a risk management perspective. Their motivation stemmed from Fink's experience at First Boston, where he had suffered a significant financial loss due to inadequate risk management. Initially, Fink sought funding from Peter Peterson of the Blackstone Group. He succeeded in securing a $5 million credit line in exchange for a 50% stake in their new venture, which was initially called Blackstone Financial Management. Within its first year, the firm turned profitable. By 1989, the assets had grown to $2.7 billion. By 1992, the company had rebranded to BlackRock and was managing $17 billion in assets. However, a conflict over equity and compensation between Fink and Stephen Schwarzman led to BlackRock becoming an independent entity. BlackRock went public in 1999, and its growth increased through a series of strategic acquisitions and innovations. In 2000, it launched BlackRock Solutions. It is an analytics and risk management division. But what makes it the largest asset management company and how it owns everything? BlackRock has a vast and diverse portfolio due to its strategic investments across multiple industries. In the technology and communication sector, BlackRock holds huge shares in major corporations. For instance, it owns over 112 million shares of Apple. This makes it one of the tech giant's major shareholders. Similarly, BlackRock's stake in Microsoft exceeds 174 million shares. This represents its confidence in the software leader. The firm also has a significant investment in Amazon with approximately 30 million shares and owns over 158 million shares in Meta platforms. Additionally, BlackRock holds more than 24 million combined shares in Alphabet, which is Google's parent company. It also owns nearly 57 million shares in Tesla. In the healthcare and pharmaceutical sector, BlackRock's investments are equally impressive. The firm owns about 407 million shares of Pfizer, which is around 7% of the pharmaceutical company. It holds over 327 million shares in Johnson & Johnson, which is a key player in healthcare products. BlackRock also has a substantial stake in Merck & Co., with approximately 188 million shares. It also owns roughly 213 million shares of Abbott Laboratories. Its portfolio includes around 70 million shares of Eli Lilly and Company. All these investments show its diverse investments in the pharmaceutical industry. BlackRock's presence in the energy and utility sector is prominent by significant holdings in major companies. It owns about 6.7% of ExxonMobil, which is a leading energy corporation. It holds about 4.6% of Chevron's shares. The firm also has a stake of about 5.1% in NextEra Energy, which is a major player in the utility sector. In the consumer goods sector, BlackRock holds substantial shares in several prominent companies. It owns about 6.7% of Procter & Gamble. The firm has a 1.3% stake in Nestle and around 3.5% of Unilever's shares. Major acquisitions include the purchase of State Street Research and Management in 2004, Merrill Lynch Investment Managers in 2006, and Barclays Global Investors in 2009. In 2020, it acquired Scalable Capital, an online investment service provider. The firm also purchased eFront for $1.3 billion. It is a software solutions provider for the alternative investments industry. Another notable acquisition is Future Advisor, a financial technology company providing services to retail investors, acquired in 2015. Another factor behind its success is BlackRock's business model. It revolves around a comprehensive array of investment management, advisory, and technology services. The company's primary revenue streams come from asset-based fees, advisory fees, and performance-based fees. Asset-based fees are charged based on the assets under management, AUM. The fees align BlackRock's financial success with the performance of its clients' investments, creating a mutual interest in achieving positive investment outcomes. Advisory fees are charged for providing strategic guidance and portfolio advice. Advisory services are tailored to the specific needs of the institutional and individual clients. In some cases, BlackRock earns fees based on the performance of their other investment strategies, particularly when they outperform specified benchmarks. It manages a wide range of investment funds and portfolios. BlackRock offers various asset classes, including equities, fixed income, alternatives, and multi-asset strategies. This includes managing mutual funds, ETFs, which is notably under the iShares brand, and private equity. The firm offers advisory services that helps clients make informed investment decisions. This involves customized investment strategies to the unique needs and objectives of each client. This is done by comprehensive analysis and research. A significant component of BlackRock's business model is its technology platform known as Aladdin. This platform is used for risk management, portfolio management, and trading operations. By using advanced data analytics and machine learning, Aladdin provides clients with the latest tools for financial analysis and investment management. BlackRock's business model benefits strategically from its global presence and diverse revenue streams. The company serves clients in over 100 countries, providing geographical diversification that helps mitigate risks associated with any single market. Offering a range of investment options helps BlackRock meet the evolving needs of investors. This includes sustainable investing strategies that integrate environmental, social, and governance (ESG) factors. BlackRock's commitment to operational efficiency is evident in its use of technology to streamline processes, automate tasks, and provide clients with real-time insights. This approach not only improves service delivery, but also helps in managing costs effectively. Larry also played an important role. He is well known for his annual letters to CEOs advocating for sustainable investing and the incorporation of environmental, social, and governance (ESG) goals into business strategies. His commitment to sustainability has positioned BlackRock as a leader in responsible investing. He has been recognized as one of the world's greatest leaders by Fortune and one of the world's best CEOs by Barron's for 14 consecutive years. He served on the boards for several prominent organizations, including New York University, the World Economic Forum, the Museum of Modern Art, and the Council on Foreign Relations. Despite all this success, BlackRock has been involved in several legal controversies. For instance, multiple class action lawsuits have been filed against BlackRock's LifePath Index target date funds, although many of these cases have been dismissed. BlackRock supports about 55% of key ESG resolutions. This figure shows its moderate stance compared to its peers like State Street, which supports 60%. These firms, often referred to as the Big Three, collectively own substantial shares in major corporations. This prompts debate about the concentration of economic power and its implications for market competition and corporate governance. So it is clear that BlackRock's influence has changed the financial landscape. This raises important questions about power and accountability. How might BlackRock's influence impact the global economy in the next 5 to 10 years? Share your thoughts in the comments below. Don't forget to subscribe for more informative content.